Technical analysis for beginners. So what's going on, everybody? My name is Thomas, and in this video, we're going to be going through a complete beginner's walkthrough, a complete beginner's guide to doing your own technical analysis. We're going to cover a lot here in this video, and we're going to make sure we leave timestamps down below. So if you want to skip ahead, you want to go to different parts of the video, or you want to go back and refer to this video in the future, those timestamps will be linked down below. I'm also going to link down below the slideshow that we're going to be walking through. We now have it up on the screen right here. And so what I want to do is use this kind of as our guide, as our home base. And then from here, we're going to go into examples, different websites, different platforms, and show you guys how this stuff works in the real world. We're not just going to use screenshots. We're going to see it live. The market's open right now, so we'll see stuff live as it's happening. And so this will be the base and kind of the guide as we go along. Links and resources down below, like always. Take advantage of those at the end of the video. And if you guys like this type of stuff, you want more, let me know in the comments and consider subscribing, hit the thumbs up button. That's all we ask if you get something out of the video. Hopefully it won't be too long, but I want to make sure it's thorough, so we're going to make sure we take our time with that. So what is technical analysis? So technical analysis, this is kind of what you're going to get from Investopedia. If you want a definition from Investopedia, here you go. But the way I see it is we're utilizing the past, and we're utilizing numbers, we're utilizing data, and we're utilizing charts, candlestick patterns, all that good stuff, volume, and we're using that to help predict the future. And we're analyzing these numbers, we're analyzing these indicators, we're analyzing price action to help predict the future. And one of the biggest keys is going to be something that you probably have heard before, and that is support and resistance. We're going to cover that in detail here in this video. But I do want to clarify that this right here is not technical analysis. This is not what we're intending to do. There are a lot of traders who like to use a lot of indicators and a lot of different things. And as you gain more experience, yeah, you might find having a lot of stuff on your screen is helpful to see. But I will tell you that some of the best traders that I know do not use very many indicators, very many things at all. They keep it very, very simple. They keep their charts, they keep everything as simple as possible. And what really comes down to it really comes down to screen time and seeing these patterns, seeing the price action, seeing this stuff over and over, and you start to get a much better handle on things. So we're not trying to do this. We're not trying to draw a million lines. We're not trying to put up a million indicators. We're not trying to look at a million different things, because what's going to happen here is you're going to look at a ton of different things. You might look at a ton of different videos, different people, different examples, and that's great to kind of give yourself a great basic understanding or get a broader understanding. But ultimately, you want to simplify things down to what you like, what works best for you and your strategy as you grow and as you build up more experience. Why do we use technical analysis? Well, we use it to help predict the future. You may hear things like fundamental analysis. That's identifying and understanding the fundamentals behind a company, right? What's their revenues? What are they valued at? What's the potential growth? What's the future? What's the marketplace look like for their products? How do they compete with competitors? That's looking more at fundamentals, price to sales, price to earnings ratios, market caps. We're not looking at that when it comes to technical analysis. A lot of people like to start with technical analysis because it's simpler on the surface. You can look at charts, look at lines, and to some people, it makes it super easy, and all they have to look at is the price action, and that will tell you all you need to know about the stock. Another advantage here is that it gives you kind of a non-biased way to trade, a non-emotional way to trade. Because what you'll notice sometimes is that you may fundamentally think this company is the best, it's going to be the next best thing and whatever. And you may think that in the next 5 years, it will do really well. But if you're using technical analysis, that could help you identify the sentiment, identify where it may go to if it's going down in the short term, so that you don't end up buying something and hoping and praying and just seeing it go down, 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 down. That's kind of why we can utilize technical analysis, or it could be a great place to kind of pinpoint spots to take profits, to add to your position or buy, right? So that's why we use it. We don't want to use it to kind of develop a bias and say and hope and pray. We don't want to do that. That's not what it's about. It's about kind of saying, okay, here are the key levels. Here's what we're watching. Here's the trend. This is what's going to happen. If this happens, I'm going to do this. If this happens, I'm going to do this. And it makes it very simple. Now, ultimately, it's very difficult for a lot of people, a lot of new investors and traders to understand that, but that is ultimately the key. So we're about to dive into the meat and potatoes here of this video. What we're going to cover: how to read charts, candlesticks, candlestick patterns, how to identify support, resistance. That's going to be a key. How to identify trends. We'll talk about kind of what we can utilize to identify trends. And what would make a trend valid. We'll talk about chart patterns, we'll talk about volume, indicators, and a lot more where that came from. Now that said, we're gonna cover a lot. The video may be quite long, but we will leave a link in the description box down below. There is a technical analysis course that I put together with Joseph Hogue that will take you through all of this and a lot more detail, more examples, plus fundamental analysis, plus building trading plans, and a lot more background. So if you want to take the next step, that is what we also have as well. That is linked in the description box down below if you're interested in taking that next step. But this is a great place to start. So let's start here and dive in. We're going to start with charting. Okay, we're going to start with the types of charts that you can look at and what the uses of these charts are. So let's jump on into that. All right, so here we are inside of my computer. This is an example right here of a line chart, okay? We are using Webull. There will be a link to Webull right here. I will also link this presentation down below in the description box, okay? So you can take advantage of that as well. That'll be there. It'll just be kind of a basic guide, but that link is to Webull. Also, there's a link to Webull in the pinned comment and description box if you're interested in checking it out. But that's the platform that we're going to be using for a lot of these examples. This is a line chart. So up in the top, I go to line style, where these little candles are situated on the chart. And then I go over to the line chart. That is the line chart. And there's also videos on this channel and I believe the TC trading channel, link to that channel down below, if you want to learn more about how to set up your desktop layout and all that with Webull. We have some good videos there if you have questions on that. But for right now, let's dive into this. So this is a line chart. So we're going to see on CNBC. You'll probably see it on the news. It's the basic understanding of the chart of where a stock is going. Now it's cool, but it doesn't necessarily tell us everything we need to know. And as a technical trader or as someone who wants to utilize technical analysis, this is not very helpful. Could give you a rough trend, but it's not very helpful. So after that, there's an area chart where it fills it in, very, very similar. Then you get to the candle chart, the candlestick chart. Here's where you see the greens and the reds. You can, of course, change the colors of your candles, but a green candle will mean that the stock from the opening of that candle to the closing of that candle, whatever time frame it's on, which we'll cover as well, was up. Red means it was down from the open to the close of that time frame. Hollow candles, a little bit different. Hollow candles are going to tell us something different. Hollow candles, the color is, was the stock up compared to the prior day close or the prior candle close, or was it down? That'll give us green or red. Red meaning it was down compared to the prior candle the prior day. In this case, we are looking right now at the 1 year, 1 day chart indicated at the bottom of our screen by the 1 day symbol. I can go to a 4 hour, I can go to a 1 hour, I can go to all different time frames. We'll cover that a little bit more in depth here in just 1 second. There's something called a bar chart, which a bar chart is going to tell you now, based on these lines and these little kind of bars, they're going to tell you where the stock opened that candle, where it closed. The open is the line attached to the vertical line on the left, and the close is that line attached on the right. So if we look at this example right here, let me try to zoom in. I know it's a little bit small. Let us zoom in here and let's show you what this exactly means on a specific day. So as I zoom myself in and we get a better view of this specific candle right in the middle where we have that 57, 56 level. So this tells me that the vertical line is the range of the day. So the top of this vertical line is the high of the day. The bottom of this vertical line is the low of the day, okay? And then on the left, this is telling me right now that the stock opened this candle at that left horizontal line that attaches to the vertical line, and it closed that candle on the right side where the horizontal attaches to the vertical on the right. So it kind of goes in and goes out. As we see, the charts will kind of move from left to right over time, right? We have the time across the bottom of our screen, the volume as well, in and out, and then the range is the vertical candle, okay? So that is that. There's also a colored bar, so you can kind of see red versus green, and then we have something called Heikin-Ashi, which is a Japanese candlestick that stands for average bar. So there's a calculation that goes into these candles that calculates the average, and essentially all you need to know is it's a great indication of trends. So they will be green when the trends are bullish, and they will be red when the trends are bearish. And then the tops and bottoms indicate kind of the range of that candle. So we can see on the green candles that we hit up to a high of 57, 56 this day. And if you go to like a red candle that has a pretty big wick to the downside, it tells us right here we hit down to about 55.94 on that specific day. So that's a brief introduction to candlesticks, a brief introduction to the types of charts that we like to use. Let's take it one step further. We're going to cover time frames in 1 second, but where can you go to look for charts? So we were just looking at Webull here, and this is the Webull platform. I like to use hollow candles, so we'll probably cover that, or at least we'll stay on hollow candles right there, because it tells us a lot, right? It tells us was the stock up or down compared to the prior candle, and it tells us based on based on the hollow, based on the solids, it tells us a little bit more. Hollow means it was up from open to close. Solid means it was down from open to close. And the color just means where it was in relation to the prior candle's close. So this is Webull. It's a free platform to use. They're going to give you 2 free stocks plus I think $5 in free crypto when you sign up, at least as of right now. That may change. Those links are below. If you don't want to use Webull, you can use TD Ameritrade. You can use E-Trade. You can use their Trade Zero. You can use a lot of other platforms where that came from. But you want to have a platform that will allow you to utilize the charting features, and Webull compared to Robinhood is 10 times better if you're a technical trader. Robinhood does not have nearly the types of features that you're going to get with Webull, so I would recommend that for beginners. And then from there, as you grow and develop, you can kind of step it up to different platforms or try out different platforms if you would like. FinViz is the next link that we have right here. That is this site right here. So let me zoom in really quick. Basically a free site. They will be littered with ads unless you kind of subscribe to the higher version. You can get an ad blocker, but they're getting smarter about that, so you're almost not able to use that. There potentially are ways around that, but for the most part, the ads aren't a huge deal if you can kind of live with a couple little things popping up here and there for free, because everything is free to use here for the most part, other than some advanced features. So finviz.com. From here, what you can do is you can type in any stock of your choice. Let's say I want to type in Apple. Pull up Apple, and FinViz will give me a chart over the past couple of months. And if I look at this, I can look at the weekly chart, and I can even look at the monthly chart. Those are free, so we can kind of see the trend of Apple over the past couple of years. Actually, this goes back to 2011 if you go to the monthly chart right now. So that's a great place to go. Here's a place to look at charts for free. That is FinViz. You're also going to get a lot more information on these stocks. Talk about dividends, talk about market cap, sales, or talk about price to earnings, price to cash. I mean, there's a lot of information here when it comes to even the fundamentals behind stocks and behind companies. It's a great place to go. And if you scroll down, you'll get some price targets, and then you'll get some news and articles that relate to these stocks. So FinViz is a great place to go. I would highly recommend it as a great place to research stocks and dive deeper and look for stocks, because we'll talk about the screening features a little bit later on in the video. The next place is stockcharts.com. That is this. So I can do the exact same thing if I want to look at stocks right here, and you can use this platform and pull up indicators, pull up different time frames. It's really cool. A lot that you can do. So for example, I can change this range to the past 2 years on Apple, and I go to update my chart. And just like that, I can look at the past 2 years. I can even have overlays of indicators, simple moving averages. I can have the RSI, MACD, which we'll talk about those, but I can overlay indicators as well. So stockcharts.com is also another good idea or a great place to go. You don't have to pay for the paid version right now, but you can get a lot of free information and just charts just from here for free, basics, all you need. So let's talk about the time frames. I want to go over to Webull again for these time frames. And so right now, if I zoom myself out, I can go all the way to the monthly time frame indicated by the M. We're looking at Coca-Cola stock, ticker symbol KO, and you can kind of see how this stock has performed over the past couple of years. So really going back, way back into the sub 2000 years, right? Going to 1997, 1994, 1985. I want to go back that far, right? And you can see the progression of the stock over that period of time. I can go to the weekly charts, keep zooming ourselves in. Each of these candlesticks is now 1 week. So that's what you need to kind of know. When you're looking at the charts on the bottom, when you're looking at the time frames and the intervals, as they say, whatever it says, M for monthly, W for weekly, D for daily, that's telling you each candlestick that you're looking at is 1 day, 1 week, or 1 month, depending upon the chart. Then there's even the 4-hour chart, but there is a difference. As you notice right here, you can see that I have extended hours overlaid on my chart. That is in the chart settings feature, you can add extended hours. If you have that, you're going to have different shading. So the darker shading is during normal market hours, 9:30 a.m. to 4 p.m. Eastern. The lighter shading, that is what's happening during the after hours and the pre-market hours. So actually on Webull, you can trade all the way from 4 p.m. Eastern all the way to 8 p.m. Eastern in the after hours, and then from 4 a.m. Eastern all the way to 9:30 a.m. Eastern. Those are pre-market hours. That's what's indicated by the lighter shading. Usually there's less volume, usually there's not as much movement, but if we do get movement or news overnight on a stock, on the overall market, it will move those stocks, so it's very important to notice that. As I scroll myself across, we can look at the 1 hour charts, we can go back even to 30-minute charts, and we can even go to 1-minute charts. Each of these candlesticks, guys, is 1 minute. And as we can see right now, this is showing us the price action for Coca-Cola today so far, and ever since the open, we can see by the lighter shading going over to the darker shading. That was the open of the stock market. It has kind of pulled back since, and it's down about 0.69% as we speak right now, about 38 cents per share as we speak here today, right now. I want to also make it very, very clear when it comes to indicators, when it comes to trends, when it comes to support, all that stuff, the time frame doesn't matter. What you need to look at is the time frame and the pattern on that time frame. So if you're noticing that there's a support level, let's say on Coca-Cola at $54 per share, and you notice that on the daily chart, that's useful. But on a shorter time frame, there are going to be other areas of support and resistance that you can also identify. So the way I see it is the larger the time frame, the stronger or the more important that support, resistance, or that trend is actually to that stock. But you can still utilize the shorter time frames for, let's say, as a day trader, a very short-term swing trader, you can utilize those shorter time frames for those trends, for those trend breaks, support, resistance. So that's always a very popular question, but it really doesn't matter as much. Do your analysis on the time frames you're looking at, but don't start doing analysis and saying, okay, I got support here on this time frame, and then all of a sudden jump to different time frames and start making different plans and seeing. That's going to cause a lot of confusion. If it's a day trade, keep it on a shorter time frame. If it's a swing trade, keep it on a longer time frame, or if it's a longer term investment, take the time frame and broaden it out even further. Okay, so now we're on to support and resistance. So how to identify, how to ID it. I like to use what's called the 3-touch technique. And that means we got to get 3 touches for an area to be a strong support or a strong resistance. Okay, so let's actually go ahead and let's look at some examples. Here is a perfect example of support resistance, and we can get a lot of lessons out of this one. So I want to dive into this one. It's ticker symbol AMAT. Okay, it's currently trading at $156.50 per share. And what we can see right now is we're looking at a stock chart that, if we can kind of look back to the left right here, we're looking at the daily chart. I like to always look at daily charts because I'm more of a swing trader myself, but that doesn't mean that I won't take day trades if I see opportunities. We have to understand something. We're looking for 3 touches to a key level or a key area or a price point. It's never going to be perfect. Sometimes it works out amazing to the cent, but it's never going to be absolutely perfect. Why? Market conditions, we can see different price action, volume, all that stuff will correlate or will have an effect. If a stock is pushing up and it's at a resistance point, and all of a sudden we get some crazy bullish news for the market and the stock market goes crazy, the S&P, the Dow, the NASDAQ all start going crazy, that resistance may not be a resistance and the stock may go straight through and it may go for more. Bad news and the stock at support, you can see the same exact thing to the downside, a stock may come plummeting on down. What we're looking at right here is a beautiful example going back all the way into March or early April of 2021. We see we have a push up into this range up around the 143 to 144 level right here, 145 on AMAT. Guess what? Stock pulls back, comes back up into that same range, gets very close, gets rejected a couple times, pulls back. Gets up again, gets very close, gets rejected at 143, comes back, pulls up again, gets up there, and then stalls out and cannot push above, gets rejected. Same exact thing, 1, 2 more times. This is like 5-6 touches on this line. This is a beautiful area of resistance on AMAT, and then guess what? Eventually, it comes back, and when it broke above, and when it broke through that resistance, big time move. Went from 142, 143 that day, all the way up to 150 the same day. Very big move to the upside, and now it's getting stalled out here at 159 a couple of times the past couple of weeks. So the 3-touch technique, if we can identify 3 touches to a range, a price range, support, resistance, that will be a key area. That's an area we want to watch. That's an area we need to keep in mind as a key level. So on Webull, I go up to my drawings tab right here. If I go over to the rectangle feature, okay, that is one of the options I have in the drop-down menu. Is the second drop-down menu right now. It is the rectangle feature. I like to use this a lot. And so if I can't put a strict line in the sand, I'll use a box. And look at this. If I use a box right here, This box is beautiful. In about a 1 to 2% range, we're looking at this stock and we're seeing that this stock has a resistance in this box, in this range, okay? Now, you may hear they're saying that prior resistance becomes new support. So eventually stocks are going to break through and go up and break through resistance. And then stocks will also break through supports. So what is a resistance? It's an area a stock won't go above. So a stock is trying to go above, but it just can't go above, okay? That's an area of resistance. And we'll talk about other ways to identify that here in just 1 second. But let's say we finally break through resistance and now we're above it and the stock pulls back. When the stock pulls back, where may it find support? At that prior area of resistance. And in this case, it worked out perfectly to a T. Now, it did dip down here on this 1 day down to about 141 very briefly, but I think it's also very important to understand wicks versus hollow or solid candles, okay? A wick, indicated by these kind of quick lines down or up, right, on these candlesticks, is showing you the range of where that stock traded. Then the body, the hollow or solid colors, that's telling you where the stock actually closed and opened. I'm more concerned about the hollow part on my trades or my candles, right? Because that's telling me that even though it wicked down, for example, on this 1 day, buyers brought it right back up. And if we get a big wick up on the top of the candle and it comes right back down, that's telling you that sellers brought it back down. That's what it's really telling you. But in this case, we broke above, and guess where we came right back down to? We hit up to 159, kind of price discovery, because at this point, a couple weeks ago, we had not hit 159 yet. Then it came right back on down, and guess what? It found the prior area of resistance to be new support, and it bounced from that level, and boom, right back to 159, and now it's stalling out here again in the upper 150s. So you love to see when it works out that way. It doesn't always work out that way, but that's a great example of showing you how resistance becomes new support and how support becomes resistance. As a stock, let's say, drops below an area of support, it's going to then find that area to be resistance on the way back up. So it's exact opposite when you're playing both ways, when you're looking at it both ways. One last thing I do want to also mention is we talked about the horizontal levels. Those are horizontal lines. We can also use trend lines, and we can also use the tops of candles, bottoms, and bodies. We talk about how the bodies and how I kind of look at the bodies as better views or better areas to watch for price action. But if we do have a wick up or down or the top or bottom of a candle, that's also an area that day that stock didn't go above or below. So those tops and bottoms and those wicks are also important on shorter term price action in terms of identifying if, let's say, yesterday we only hit up to, let's say, $158 on this stock, but today we're over 158. That could be a little mini breakout to the upside and go higher because that was the high of the day yesterday, and the exact same thing on the downside. A low of the day, let's say yesterday, is going to also be an area of support for today until we break down below and go for more to the downside. Quick note on trend lines. I like to use the same exact thing, the 3-touch technique. So what I'm looking for in a trend line is I am looking for a stock or me to be able to touch 3 points, okay? So I can use a trend line on the top of candles as resistance, or I can use it as support. So here's a quick example on Apple. Look at this, beautiful, beautiful. We have a trend to the upside. We also have a trend to the downside here as support. So the top is resistance. 1, 2, 3 touches. That's a 3-touch technique. I'm gonna draw my trend right there. Above that, a breakout of that trend, but that's a trend that is a resistance. And look at the bottom side. 1, 2, 3, 4, 5, almost 7 times we hit that trend line. Beautiful, beautiful, beautiful. I am going to go in here to my trend line tab, and I'm going to draw my trend line across the bottoms of those candles, and I'm going to try to get at least 3 touches. If I can get 3 touches and we're not seeing crazy price action below that trend line, that is an area of support, and that is a valid support. I will draw my trend there and leave it and save it as so. Okay, so next we're going to talk about pattern recognition. So again, here is FinViz. We're going to use, I have some screenshots showing you kind of what we can utilize on FinViz. But I like to use the signal tab and the technical and pattern tab. So we'll go and show you exactly how that works, how we can get to that point here in just 1 second. Let us now dive on into finviz.com. Okay, we're on Apple. What I want to do is go to the screener tab. Click on screener, just like that. So the first step is I can utilize what is called the signal tab right here. So we can look through a lot of information right now, but they have things like trend line resistance, trend line support. So we just saw on Apple, you can pull that up. Horizontal support resistance, I can click on that. A channel up, down, a wedge, all these different things, all these different patterns. There's a lot more that we can cover here in this video. All of that can be found on the Signal tab here on FinViz. On top of that, just under where it says Signal, there's a Technical tab. If I go to Technical and then I go over to the Pattern option right here, boom, I can get a lot of those exact same indicators or technicals. I can get that pulled up my screen. So this is a great place to start to look at patterns and to recognize patterns. There is so many where that came from. There's so much. I always like to bring it back to support, resistance, and trends. That's as simple as you need to make things. There's obviously things like bull flags, there's wedges, all that stuff, but we'll cover a couple here. But the best place to learn, the best place to see it is to recognize that and look through finviz.com. So for example, if I want to look for a stock that has strong horizontal support resistance, I'm going to find horizontal support resistance and strong. If I click on that, they're going to give me a list of stocks. I could hover over the ticker symbol and then I can get a quick view of the chart, or I can click on these stocks. For example, if I click on this stock, I will get this stock AEIQ, and then FinViz is going to do this. The computer is going to do this for me. They're going to draw these lines for me. So for example, this blue line that's right across the screen here, it looks like just under about $40.50. It's showing you we have a support right here, a support level here, right? Because it bounced, and it's showing us in the past it was a resistance point. So prior resistance has now become new support, and there you go. You're also noticing a channel. So kind of very similar to the Apple chart, we kind of have this purple line on the top indicating the top of our channel. So we have 1, 2, 3, 4, almost 5 touches to that channel or to that trend line resistance. And then we have 1 and 2. We don't have a perfect 3 touch on the bottom, but you can kind of see what they're getting at there with that channel up and down. So this is a very good place to go if you want to learn more or just get more screen time, which we'll talk about at the end too, how important that actually is. See things, see more patterns, see more stocks, see more trends, see more horizontal supports, see more resistance levels. This is a great place to go. I want to look at a couple different patterns. I want to talk about multiple tops and bottoms. So what does that mean? Okay, if we go to a multiple bottom or a double bottom, as they say, or a double top, this is actually really useful. So if I pull up, let's say this stock right here, here we go, we pulled this one up. We have a multiple bottom indicator right now indicated by FinViz. ALVR is the ticker. We can see that it came down here just under $17 once, twice, and then a third time. That's multiple bottoms, and it's showing us that at those points, that is very strong support. The stock will not go below those levels, and that's indicated by the multiple bottom feature. We can, of course, also utilize the multiple top feature as well. That is going to indicate areas of resistance. So if I go over here and I go to, let's say, a double top, I'll go to a double top really quick. Let's see if I can find a good example of a double top. Let's go to BCOR. They have a double top right here where you have the stock got up to, looks like 1850 once, and then it got up there again. That is a double top. And so FinViz, again, a great place to go. Sometimes there's some lines and stuff that you don't necessarily need to see because it's kind of clouding things up and making it too complicated. But if you want to see more examples of these things, it's very useful. So multiple bottom or double bottom, that is support. That's indicating that we can see a reversal back to the upside. Multiple top or a double top, that is an area that's showing to be resistance that the stock doesn't want to go above. A breakout over that could be a very nice breakout or a big move up. But for now, if the stock can't go above, that's probably indicating that it's going to come back to the downside, and that's exactly what we saw here on BCOR over the past couple weeks, and now it's starting to bounce back up and go back up towards that top, or that multiple top, or that double top in this case. So that's a great introduction to pattern recognition. The next step now is going to be indicators, how to view and add them, the uses. We'll talk about all that stuff. So I'm going to go over to Webull to do this. So again, here we go. If you want to follow along, I would highly recommend it. So right now on my chart, there is this blue line right here, and then this is Apple again, and then there's this orange line. If I want to update that, change that, do something there, top left of my charting feature, there's going to be a tab that says indicators. Okay, I'm going to click on that. I currently have selected now in blue VWAP, volume weighted average price. I have MA, moving average, also stands for simple moving average. So if you see SMA, same thing. And then there's an edit feature. If I click on edit, here we go. I can go and edit my indicators. Personally, for me, I like to utilize moving averages, and those are indicated, as we can see right here, by the two selections that I have right here on my chart. The orange as the 200 SMA, or MA, and the blue as the 50 SMA, or MA50, same exact thing, okay? 50 SMA, 200 SMA, Those are my two indicators that I personally like to use. Now, again, there's a lot where that came from, but those are probably two of the most popular indicators when looking for trends and when looking to see stocks on a broader time frame. I would encourage you to do your own analysis and over time add in indications and indicators that you might like. And also, every stock is going to respect certain levels differently. So we're going to utilize these two, and I'll show you how important it is. Okay, I'm going to go to SPY. This is the S&P 500 ETF. Let's pull this bad boy up. So here it is. I have some key levels that I drew up to the upside, and now what we're going to look at is we're going to look at this blue line over the past couple of months. So this blue line, okay, it's not perfect. It's definitely not perfect. But this blue line was an area of support for a long period of time. Look at this, the 50-period simple moving average. Now, when a stock is above the 50 SMA, that's bullish. That's very bullish. And what that actually is it's calculating the average of this stock over that past 50 periods. In this case, I'm looking at the 1 year, 1 day chart. So over the past 50 days, at any given point, that's giving me the average of the price. So you can start to think if we're above the average of the last 50 days, that's pretty bullish. The 200 is also a bullish indicator if we're above, but if we start to drop below the 50 and then the 200, that could be very, very bearish. And that's telling us that, hey, over the past 200 days or 200 periods, depending upon the time frame I'm looking at, we're now below this indicator. That seems pretty bearish right now. And it's very useful to gauge the sentiment of the stock or the market. So also something to note too, if we zoom in really quick here, notice what happened when we fell below. This area was a very good area of support. We bounced at that 50 SMA every time for a while, for months. We have finally broke below. Boom, we actually came down pretty big, pretty substantially to the downside. Then we tried to come back up. And what happens? What does prior support turn into? Prior support turns into resistance. If there's one thing to take away from this video, that is probably the biggest takeaway. Prior support turns into resistance and vice versa, okay? Prior resistance becomes new support. So we fell below, and then guess what? Blue line, we got stuffed. We couldn't break above, fell back, came back up again, fell back, and then eventually broke back to the upside, and bullish momentum continued. But that's one of the biggest uses and one of the biggest things to utilize right there when it comes to moving averages. Now let's look at some different indicators we could use. I'm going to go to my edit tab, and I'm going to pull up something called the RSI. If I scroll to the bottom, I'm going to see RSI right here. That's called the Relative Strength Index. I'm going to use the RSI 14 in this example, and it's indicated now at the bottom of my screen. Over 70 is overbought, and below 30, that is oversold. Okay, so generally speaking, when we see the RSI go down to sub 30 levels on the bottom of our screen, that could be a good buy for a reversal. And generally speaking, when the RSI goes up into the overbought territory, that could be time to sell, time for the stock to come back down and reverse back to the downside. That's the RSI, that's the Relative Strength Index. Could be a very useful indicator for you. I know a lot of people like to use it, and I think it could be very, very useful, especially when you see wide ranges or you see stocks going way, way up and way, way down. It could be good. Does not mean the stock can't go further to the downside if it's below 30 or further up if it's above 70. Doesn't mean that, but it could be useful to gauge overbought versus oversold levels. Back to my edit, I'm going to get rid of the RSI, and what I'm going to do is I'm going to add something called the MACD. Some traders absolutely love the MACD. Some traders do not love the MACD at all, but here we go. On the bottom of our screen right now, we are seeing different little candlesticks. You see these reds and you see these greens, and we see the kind of the different lines right here. This is key. What we want to utilize here, if we go back to our edit feature, and we go back to the MACD, if we scroll down and again find our MACD, you can go and edit different lengths. I'm going to utilize all the lengths that are given to me preset here with Webull. That's a good place to start. Don't dive into that. Don't start changing the inputs just yet. Obviously, as you become more advanced, you can go ahead and do this. But we have the signal line, which is the blue line, and we have the MACD line, which is this line right here in yellow or orange, okay? So the signal line, when the signal line, right, is crossed by the MACD line, so this orange line crosses the signal line, that could be the indication of a buy. When the orange line is below and it crosses up above the signal, the MACD crosses the blue right here. It's also indicated by a change from red to green in these candles. When that happens at the bottom of our screen, that could be a buy signal for momentum, okay? When it crosses back below to the downside and we see the greens going to red, that could be the sell signal back to the downside. Again, this is a momentum-based indicator, so it can be very, very useful to see the ups and the downs, the flows, and gauge trends when looking at these stock charts. And MACD is one of the next, at least, indicators that a lot of traders like to use to gauge that range, to gauge the ups and downs and that sentiment shift and the trend that we're noticing. So like we said, using these indicators, it's very useful to identify those trends. Momentum shifts, again, we talk about the 50 SMA when a stock's above that, very, very bullish. And as it falls below, that could be a sentiment shift back to the downside. Okay, now we're potentially bearish for right now until we get back above that 50 SMA. That's what we saw in the S&P this past couple of years, or past year at least. Now, it's also a good tool for risk. So let's say I am riding a trend. My stop loss, I might get out of this trade if we go bearish. And going bearish on the S&P is dropping below the 50 SMA, at least as of right now, because it's been a really good area of support. So that could be your risk guidance. You can use these indicators to say, okay, if we start to reverse back to the other side, or we go into overbought territory, I'm going to cut my position off there and take my profits. We go oversold, I might look to add to my position. It could be a great way to utilize these indicators to develop a risk tolerance, right, to your stocks and develop that and utilize that in your own trading. That's one of the best ways to use indicators. But again, you have to understand too, it's just an indicator. It does not mean the world. A lot of indicators could tell you different things. So pick the ones that you like and try to keep it as simple as possible. Next, we're going to talk about volume. Let's turn up the volume right here, okay? So we're talking volume before price. You've probably heard this before. We need volume for a stock to move, right? We need volume. There's no volume, there's no trade, okay? That's what you need to understand. Volume before price could be a signal that tells you something about what is going to happen. If we see a stock that is going down, 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 and then all of a sudden it stops going down and it starts to consolidate, and then the volume picks up and we see higher volume, what's that telling us? That's telling us the stock is not moving, but volume is increasing. It may be setting up for a reversal back to the upside. That's what I love to use volume before price for. That's one of the biggest uses of it. I also want to touch on low volume sell-offs. Okay, so let's talk about some examples right now, and let's talk about what we're seeing right now on the S&P. Here's S&P. Let's go back over to Apple, and let's talk about how Apple has moved over the past couple of months, and let's talk about some of these low volume sell-offs. So take a look at this. Apple gets above the 50-period simple moving average back in here at the looks like mid-October timeframe, and then it gets above. Then we have a couple days where Apple hits up to 152, and then it sells off for 2 days, but we notice this right here. Look at this. On 11/11, look at this day. Look at how low that volume, at the bottom of our screen, that volume candle is super low compared to the prior days. That could be that's a sign right there of a low volume sell-off. Stock pulls back on lower volume, less conviction that it's going to go down, and the volume picks up, and what do we see? Stock goes right back to the upside. And so that's how we can utilize those low volume sell-off. Now for a different example here, we're going to use a stock, kind of a penny stock. This is VECT, V-E-C-T is the ticker symbol. Now, this stock right here is really interesting to me because look at this. It's been selling off for months, just for months. And that sell-off has seemingly been exaggerated the past couple of weeks. What are we noticing right now? Look at this. Look back into the end of October, into early November. We see the volume candles on the bottom. The volume picks up substantially compared to what it was back in October, back in September. The volume picks up substantially as of late. What are we noticing right now, guys? We're noticing right now the stock is reversing. Past couple of days right here, it got down under $3 or just around $3 and it consolidated. It didn't really move, okay? And now volume is coming in big, and now we're seeing this potentially reversing trend and pushing to the upside. And that is an example of showing volume before price. The volume starts coming in. We can say that that could be loading up. People could be loading. Hedge funds, institutions, traders could be loading the boat, as they say. Loading, loading, loading before that run, before that price action then follows. And that's a perfect example of volume before price. You see it a lot more. It's a lot more noticeable in penny stocks, but it's again, the same concept can apply to any stock you're looking at. Now I want to talk about screen time. It's something called the 10,000 hour rule. So it takes 10,000 hours of intensive practice to achieve mastery of complex skills and materials. Now, that is something that Malcolm Gladwell has said. This is something that you probably have heard before. If you haven't, then here you go. But putting yourself in front of the screens is a great way to learn technical analysis, right? At the end of the day, you can think you know support, resistance, but seeing it time and time again is going to make it so much easier to identify, so much easier to predict, because you're going to have seen the same patterns. You're going to have more time and more experience under your belt. That's ultimately the best tool for you. right? That said, where can you go to get more experience? Where can you go to take the next steps? We have this technical analysis trading course that I created with Joseph Hope, who has the Let's Talk Money channel with over 500,000 subscribers. Awesome, amazing content there. He's got some great content. We also have some great content here for free if you want to go there when it comes to technicals, talking about the stock market, talking about stocks, stuff like that, investing. I would highly recommend, if you want to take the next steps, this course, because we put it together. We put a ton of time. It took months to put that together. And it is a great place to go into much more depth, more detail when it comes to technicals, different patterns. We talk bull flags. We talk trading plans. We talk more about the psychology. We talk about that stuff because that's really, really important. When it comes down to it, letting your emotions take control is something that happens to a lot of people and it ends up really hurting you in the long run of your trading or investing careers. My channel right here is also a great place to go. I have plenty of playlists where that came from. We talk about tons of stuff right here. We have a swing trading playlist, a penny stock playlist, a day trading playlist. We have a playlist on Webull. We have a trading stocks to $100,000 playlist where we talk about and go over all the stocks in my Webull portfolio. We talk about that as well. We have a candlestick kind of beginners video. We have a lot where that came from, finding stocks, technicals. These playlists, again, are great places to go for free to take the next step. There's also a link down below in the video description to 2 more channels that I currently also post on. The TC Trading channel, mostly tutorial-based content, and then the Stock Trends channel, which is technical analysis focused. Okay, so here's TC Trading. If you have questions and you want to learn more about certain things, let's say on Webull, let's say on candlestick patterns, different trading styles, different options techniques, all that stuff, that's where I'm going to post those types of videos. So any questions I get in this video or these videos, I pull those together to build out other video ideas. I try to post here at least once per week, okay? Tutorial focus, tutorial style. This channel, Stock Trends, I also post on. We talk about what is going on right now in the stock market and with a lot of stocks that have a lot of attention on them. A lot of traders are looking to trade them, right? So we talk about what's going on, technicals, key levels, support, resistance, all of that stuff here on this channel. That's, again, linked down below. We keep these videos super short. You can see a lot of them are like 5 minutes, 4 minutes, 2 minutes. They're super short to the point. So we try to kind of get in and get out with what you need and then go from there. Those will be great resources to go to if you want to take the next steps. Again, there's a course, and then there's, of course, this channel, other channels. So I try to keep as much as we can for free because ultimately I know a lot of people don't want to pay, monthly. They don't want to pay thousands and thousands of dollars for courses. And so Joseph and I put that course together. It's an affordable price, so we kept it very, very straightforward there. He brings a lot of his more fundamental side to the table, which is very, very important as well. And we dive into technicals, trading plans, and all that. And then on my channels, we post here all the time. I'm not going anywhere. We're going to be here whether people care, whether they don't care, whether we have a new surge in retail traders or we don't. We're not here for the views. We do it because we enjoy it. And I really like this stuff. And I think it's very useful to share and to talk with other people and to get feedback in the comments and stuff like that. So those are the resources. Let me know in the comment section down below if you got something out of this video. I appreciate you guys for tuning in. Hit the thumbs up button and consider subscribing here for more videos. If you like this style, let me know as well because I want to kind of do more of these. I know it was long, but hopefully it was helpful and hopefully you got something out of it. And I appreciate you guys for tuning in. Happy trading, and we'll see you in the next one. Peace.